Thank you for joining us. Welcome to Business Incorporated. I'm Chimizi Obi Iwago. On the show today, Nigerian offshore oil hub Lador to consider bonds and stock listing. South Africa's Telkom to set up mobile push to counter revenue decline. Plus, oil output at Libya's Agoko back to 250,000 barrels per day after power problems. We'll start off the show with the markets, and here in Africa, both the South African market and the market here in Nigeria were down at intraday. The JSE index was trading lower at 0.33% after the S&P Global Ratings affirmed South Africa's sub-investment grade credit rating and kept its stable outlook on Friday, warning the country's improved economic growth remained tentative and the fiscal position was still weak. The NSE index was down 0.51%, but Egypt was in the green at 0.70%. Kenya closed in the negative on Friday, down 0.67%. In the Middle East, Qatari stocks led regional gains at intraday, with other markets generally subdued amid sluggish trading volumes during Ramadan. The Qatar index was up 1.47% in early trading, with Qatar National Bank rising by 2.9%. The region's largest bank has been bolstered in recent months by its move to increase its foreign ownership ceiling to 49% from 25% to boost its weighting on global index. Saudi's main stock index dropped by 0.17%, with Savala Group and developer Dar Alkan Real Estate both down 2%. The Abu Dhabi index was up 0.23%, helped by a 1.9% rise for Dana Gas after it said it had received $40 million in payments from the Egyptian government. And the Dubai index was broadly flat, down 0.07%. In Europe, stocks were slightly higher in early trade as investors monitored signs of thawing tensions between the U.S. and North Korea and reacted to renewed political turmoil in Italy. For more, here is my colleague in Frankfurt, Conrad Busen. Hello, Conrad. Good to see you. It's been a while.
Yes, Jimmy. Hi. Hi to everyone in Nigeria.
Oh, we're all doing great. Now, Italy's president refused to nominate a Eurosceptic finance minister, and the designated prime minister has called up the formation of a new government in Italy, which means the political chaos in Italy continues. Risk up or risk down for the financial markets?
I'm afraid I have to say the risk remains up. You mentioned the positive start of the equity markets here in Europe this morning. Yes, there was a bit of a sigh of relief in early trading, but look at what the German share index DAX has done today so far. It decided for the downside again. Risk remains up. Markets remain concerned about what's going on in Italy. Also, Italian government bonds, they fell in early trading, but now they're on the way up again. And also the euro, our currency, is trading lower, more or less where they were at the end of last week, on a relatively low level, the weakest level since last November. Many economists predict that the perspective of a new general election in Italy, now that the forming of this government has been called off, the perspective of a new general election will cause uncertainty on the markets, more uncertainty. It will weigh on business sentiment. It will prevent companies in Italy to spend and to invest. And also, it's likely to have a very negative outcome again. Many people on the financial markets wonder what the outcome of another general election will be. And they say it's very unlikely that the anti-elitist, anti-establishment, anti-austerity vote will simply go away.
Now, what do the developments in Italy mean for the European Central Bank and its bond buying program?
Well, of course, all this is sort of heating up the discussion about whether or not the European Central Bank will be able to continue to phase out its quantitative easing program, its bond purchases. Remember, the end for this program was scheduled at the end of September. But many people here are saying it's not going to be that easy. Of course, also the Italian economy has recovered, but much less so than the economy in other parts of the Eurozone. And it's quite obvious that the recovery of the Italian economy only happened because of the strong support of this super generous monetary policy by the central bank, the low interest rates, but also the bond purchases. So now it's become more difficult for the European Central Bank to really phase out this quantitative easing. In this regard, it's also, I think, important to note that the new man that was called to form an interim government, a stopgap government in Italy, Carlo Cottarelli, he comes from the IMF, the International Monetary Fund. And of course, as soon as one mentions the International Monetary Fund in relation with a Eurozone country, everyone is thinking here about contagion risk, about, you know, the Euro crisis where so many countries in the Eurozone had to be bailed out.
Well, I guess we'll continue to keep a tab on the developments there in Italy. But let's look at some corporate news coming in. Trading in shares of Samsonite International, that's the world's largest luggage maker, was suspended today. What's going on?
You know, Samsonite's shares lost about 1/5 of their value only at the end of last week, only towards, during 2 trading days, Thursday and Friday. And this strong drop of the share price had to do with a report by an investment company called Blue Orca, which is a short seller. It's a company that is known to try to benefit from falling share prices of a company. Blue Orca came out with a report about Samsonite, accusing the company of false balance sheets, of artificially inflating its profit margins. It also accuses the CEO of Samsonite of falsifying or embellishing his CV by claiming that he has a doctorate in business, which he actually doesn't have. Now, this is what's behind this drop. Today, trading was suspended for Samsonite shares, again, because Samsonite announced to the Hong Kong stock market, this is where Samsonite shares are listed, that it would come out with a statement. But during all of the Hong Kong trading today, and also while the European markets are open, there has not been one statement from Samsonite. And of course, that makes many people here wonder. The world's biggest luggage maker, a very renowned company, Samsonite, why can't it manage with accusations like they happened last week, and with a drop of the share price more professionally? This is very bad PR, and it's likely that the stock will come under pressure again as soon as trading resumes, potentially tomorrow.
Well, I guess they will definitely come out with that statement. Let's just wait and see what happens. Thank you very much for your time, Conrad, and enjoy the rest of